Joining us now is Michael Saylor, Strategy's Executive Chairman. Michael, it's great to speak with you.
Yeah, thanks for having me, Morgan.
Okay, there's a lot to get to. But first, I do want to start with the fact that there are reports that you were in Washington last week meeting with policymakers about this strategic Bitcoin reserve bill. How are you advising lawmakers right now, and why is the case there to create a strategic reserve?
Well, I think Bitcoin's good for the nation, and the country would benefit. We did buy something like 78% of the entire United States for about $40 million over the past 100 years or so. So I think the United States ought to own a large part of cyberspace, and Bitcoin is the next frontier.
What does it do to prices, especially as they've been chopping sideways, even coming off a little bit recently?
You know, I think the real story in Bitcoin right now is corporate adoption. We've got a consistent acquisition of Bitcoin by the big ETFs like BlackRock, and that's taking up all the natural supply, and they're doing that on behalf of institutional investors. But these 180 companies that are capitalizing on Bitcoin are buying even more than the natural supply being created by the miners, and they're putting upward pressure on the price. And I think that as we work through the resistance of late and some macro headwinds, we'll actually see Bitcoin start to move up smartly again toward the end of the year.
At the beginning of this year, you and I in January sat down, had an hour-plus conversation at the ICR conference about this very idea, Bitcoin treasury, what you were doing at Strategy, and where it made sense for others to potentially adopt a similar concept as well. What are the types of companies that you're seeing lean into this, and at what point do you think it starts to accelerate if it does?
Well, I think you've got two types of companies. You've got operating companies that would otherwise be returning their capital via dividends and buybacks, or they would just be holding low-yielding money markets. And they're choosing Bitcoin as a treasury reserve asset, so that actually improves their capital structure. It strengthens those companies. There's a lot of those. And then there's a second sort of company, the true treasury companies. They're capitalizing on Bitcoin. Bitcoin is digital gold. The world ran on gold-backed credit for 300 years. The world's going to run on digital gold-backed credit for the next 300 years. So treasury companies, in essence, are holding digital capital and creating digital credit instruments on top of that digital capital. And there's, of course, a huge demand for equity and credit instruments in traditional capital markets. And Bitcoin is emerging as the ideal form of digital capital to back those instruments.
Yeah, and I want to dig into that a little deeper here, Michael. But first, I mean, gold's having a huge run right now, too. It's at $3,800 an ounce. It's basically trading at record after record this year. But Bitcoin hasn't sort of moved lockstep. So how to think about that analogy in this environment?
JP Morgan said gold is money, everything else is credit. This morning I said Bitcoin is money, everything else is credit. The success of gold is indicative of the demand of mainstream investors to have a bearer instrument that's a long-term store of value, that's not a currency derivative and doesn't have counterparty risk to a corporation. Gold fits that bill. Bitcoin fits that bill even better, and it's sort of got the digital upside. You know, you can't teleport gold, and you can't program gold to vibrate at 1,000,000 times a second on a computer. So Bitcoin is the technology version of gold. It's digital gold. It's going to be, in my opinion, 10x bigger than gold, but they're the same idea.